Everybody, today is Wednesday, the 8th of August, 2011, and let's take a look at this market here. This is Brian Shannon speaking. Let's take a look, like I said, at this market. We've got the S&P 500 on here, down $5 today, another 4.42% losing day today. So, we've got just very difficult action. We continue to be in this environment where we're below a declining 5-day moving average. We have spurts of buying, but none of this buying activity is anything that sticks for very long. I was mentioning quite a bit on Twitter today, actually for the E-minis, the volume weighted average price, because we had sold off really just in a real nice little stair step pattern lower, and then kind of got back up towards that volume weighted average price, created a higher low, another higher low, and we kept tapping away at this volume weighted average price, and it finally went through there, and there was a nice clean break, and it was a decent trade at that point. But then the pattern went once again to lower highs and lower lows, and from there it's just the VWAP acted as resistance again, and just a pattern in here this afternoon from basically 2:15 Eastern on, where we had this just lower highs and lower lows right into the end of the day, the close here, big volume, and it's a brutal environment for even for shorts. I think in here, you look at them and the market is down so much, and these are unusual types of trading in here. There's got to be news coming, I think, of some giant hedge fund or someone or somewhere something is really behind the scenes. This type of forced liquidation is really very unusual. If we go back even to 2008, and we take a look at the action in there, here's our let's take a look kind of side by side. We've got, this is 2008, the white chart basically, and we saw from September into October was that first leg lower, and then we had this massive bounce in here, and you might not look at it as a massive bounce, but if we take a look at what these lows were on this day, 83.58, 2 days later we were up at 105, so there was a 22-point bounce from low to high, and that's the appeal of looking for the bounce. Like we saw yesterday, we had a really nice big bounce in here. The market, it closed right on its highs, again below the declining 5-day moving average, and it got a lot of people stuck, I think, who were looking for follow through the next day, and here we are down near these lows again, and just in an environment where it's extremely difficult. This is what I was going to mention, two things actually on the weekly chart. We do have, since this was already drawn on there on the weekly time frame, if we take a look at Steve is funny. If we take a look at the 2009 lows to the high in of this year, and we take a Fibonacci retracement off that, a 38.2% retracement brings us down to about 110.70. Now, the other thing that we were looking at, I guess it was Monday night, was the volume weighted average price since the 2009 low, and that comes in right about 110.70 as well. So this 110.70 is an area that we would look at as potential bounce area. But as I said in that post, this market has just blown through every single level of what was supposed to be support and what people were calling support. We were looking at any prior level, the resistance, well, it should become support here, or the Fibonacci off of this or that. Not a single one of them has been useful towards finding the tradable low. And so right now we can't say that volume weighted average price that comes together with the Fibonacci, we can't say that is going to be of any value either. This level lines up twice here when we take a look at, like I said, the volume weighted average price. So let's just do them together, and this Fibonacci. They're pretty much right on the same exact spot. So it's a level where maybe we're going to start to see less supply coming into the market. Maybe we're going to see some bids coming in. Yesterday, the low was right around in that area, and so far, that's the low. We had a what's known as an inside day, which really doesn't mean anything. But yesterday's low was 110.27, and so in that area, maybe that will, in hindsight, be the level that we all look back and say, yeah, that's how it works. But right now, there's just no certainty around that. And the point I was trying to make in that post Monday night was that it's similar to our job is looking at charts isn't to say, okay, 38.2% pullback, I'm going to put 50% of my money in here. Now it's 61.8%. I'm going to put the rest of it in, and just it's not it shouldn't be used in my mind as a strategy, more as just tools for analysis to say, here's what the clues lead to. Like the police look at their investigation and they say, we've got this piece of physical evidence, we've got that piece of evidence. And the public saying, well, why? How come you're not arresting this suspect, this person of interest? Well, the person of interest is similar to our levels of interest. This is a level of interest. It doesn't mean we go in and arrest the suspect. It doesn't mean we go in and back up the truck long. It means that here's where we take a look at the price action and say, maybe there's going to be value assigned to the market in this area. But we need to look down at shorter term time frames and say, is that what the evidence suggests beyond a 1 day knee-jerk bounce? And right now, the market is very inconclusive. It's actually conclusive. I shouldn't say it's inconclusive. It's quite conclusive. We remain in a declining environment, below a declining 5-day moving average, and rallies below a declining 5-day moving average are guilty till proven innocent. If you're going to take the trade on the 1 minute time frame as it gets back above volume weighted average price, and today it was, what was more important was the E-mini futures, because we had a big overnight range, so that makes the E-mini futures, with the overnight range, a better tool to measure. The point is, whatever you're looking at, if you're buying right in here, and you've got to remember that. What are you buying for? You're buying for a bounce, but if it doesn't bounce and instead it goes like this, what's the proper course of action at that point? To take your loss. The plan is risk versus reward. The reward is probably going to suck when you have a declining 5-day moving average. This level in here at well, let's just go back to the SPY for a moment. This level in here at this, yesterday's highs, 117.01, I think it was. This area is now resistance, this prior support. Here's a key level. We're going to see this 5-day moving average begin to flatten out. The market might make a move up to it and then even back above and down through. But again, when we're looking at this short-term trend and we're trading maybe off a 1 minute chart and looking for capturing this type of rally, then we have to, again, remember the definition of trend. Once we buy, and if it violates that initial low, we got to get the hell out of there. Take our stop and say, you know what? There I go, looking for the bottom again. What the hell's wrong with me? But at least I'm doing it in a consistent, disciplined way, versus the people who are just saying, oh yeah, that looks like it's down a bunch. That looks like it's down a bunch. Let's buy some here. Oh, that's the real panic. That's the real fear. And you know what? Sometimes it works. Usually, in a lot of, like I said, a lot of times it does. This market, though, is revealing what a flawed strategy that is, because people have been trying that for the last 2 weeks, is to find that low, and instead they're just getting the shit kicked out of them, and it's a really mentally and financially just a very challenging environment to be in. So, enough about I guess that we have. What's the conclusion here? We'll look at the other markets, but the conclusion is that we're still in a downtrend. We had this one little blip higher with a declining 5-day moving average, and those rallies are generally going to fail. So switch to shorter term time frames. This heightened volatility is, a lot of people, myself included, have been looking for this type of bounce. It's not happening. The longer it takes, the less likely it is that it will be a violent bounce. Instead, if they don't scare you out, they're going to wear you out. Similar to the way, silver, it reminds me of trying to catch a bottom in silver back in April. And a lot of people got badly damaged in here. It was a very difficult, challenging environment. And you look at it, and we got that first bounce. A lot of people got excited, and then it made a lower low. And then it just basically went sideways, and here we are. Silver's still trying to recover from that sell-off. We have this prior resistance, maybe going to hold and support is here, but this market is still calming down. We're still, in my book, I put the example of if you're on the 15th floor of a building and you drop a ball, on the first bounce it might bounce up to the 12th floor because there's so much energy, and then it reaches the top of the arc, it drops back down, hits the pavement, and bounces up to the 9th floor, and it drops back down, bounces up to the 6th floor, and eventually just dribbles out. If they don't scare you out, they'll likely wear you out, and it's a tough fight if you're fighting it. The Nasdaq made it close to actually the breakdown point yesterday with its rally, and we've got now we're back down into this abyss. It's actually, it's trying to stabilize. I shouldn't be that dramatic, but it's trying to stabilize here. And is there an area in here that would make sense that this prior resistance is now acting as support near the round number of 50? Yeah, we could say that, but is the action turning bullish? Or we got rejected just below the 5-day moving average twice. If you look at the semiconductors, they've been a little less volatile than the rest of the market later, but they got up to the same level basically as the close yesterday after the gap down and rallied back up a little bit beyond it. But look where they were halted, right at, almost to the penny, at that declining 5-day moving average. If you don't think that big money trades around these types of things that we talk about, these moving averages and pivots and volume weighted average price and that sort of thing, you're completely insane. Turn your computer off and go look at the valuations of General Motors or whatever it is. And I'm not picking on anyone or any style. I'm just saying we have to be aware of what motivates other participants to act in here. And in this case, it's fear and forced liquidation probably, and a lot of technical analysis levels are being observed and acted around. So you have to be aware of that. Financials were down 7% today, right down near their lows. So this group continues to be really the worst on the downside, and gold is in this runaway uptrend here. It's starting to take that look of a parabolic uptrend, and a parabolic uptrend is basically an uptrend where everyone's chasing it. It won't sustain itself. It doesn't usually end well, but trying to pick that top and short into this is no different than trying to obviously be on the opposite side and pick that's down too much each day here as the market just continues to get obliterated. So you can look at things like the VIX, and my opinion of the VIX has always been that it's the most misunderstood and misanalyzed tool there is out there. If you take a look back, we got up into the 89 or so level in 2008. So I don't think the VIX is up too much. We could see it go to 80 again. Why not? Why couldn't it? Basically, but this has generally been an area, this 45, I guess, and I shouldn't even be analyzing the VIX because I'm not a VIX person. I don't think it's generally useful. So I just wanted to point that out, that it is unusual here, but it's not unprecedented, would be the proper way to look at that now. Anyways, we're in a very difficult environment. Let's see if we begin to stabilize in here. As far as stock picks go, it's just a waste of time right now. trying to pick the stock. I think that that by that I mean it doesn't mean you can't pick the right stock right now, but for the amount of effort you're going to put into finding that one or idea that's going to work, you're really better off just studying the market, studying the psychology, reading what other people are saying on StockTwits, reading blogs, and assimilating all that information, and not trying to form an opinion of, yeah, I'm going to take that guy's side. I think it's down too much here right now too. But take all that information in the peripheral, and see, just form your opinions, and wait for the evidence to confirm before you go in and make the arrest or make that purchase. You have to make sure that you have the opportunity to have a favorable outcome, because if you're too early and you're too big, you're just going to be dead. And that's all my analysis for today. I don't have any big predictions. I think that defense remains on the field here in a strong way, and hopefully this action will kind of shake out here, somewhat in the near term. But thanks for tuning in. I will talk to you on Friday. Best of luck trading.